Hi guys, welcome back to the 22nd Annual Home Buyer Fair. For the next 30 minutes, we're going to be discussing property taxes and insurance. The first 15 minutes will be in English, y los últimos 15 minutos serán en español. Stay tuned until the end of the segment to see how you can enter to win a gift card. My name is Jamie Bella, and I'm a HUD certified senior home buyer advisor with Affordable Homes of South Texas. Today we are with George Gonzalez, assistant chief appraiser with the Hidalgo County Appraisal District, and Rose Valaya, CEO of Hope Insurance. Hi guys, how are you?
Hello. Thank you for having us.
Thanks so much for being with us today. Hope you guys can share tons of your knowledge and information to everyone watching at home. So my first question, I guess this is for George. How are property taxes used and evaluated?
So the property taxes, everything starts with the appraisal district. We appraise the property as of January the 1st every year. And that information is given to all the taxing entities, the schools, the cities, and the counties, who in turn set a tax rate and collect taxes so that they can go and have the public services that we all take advantage of.
Okay. And how often is my property going to be appraised?
So as you know, we appraise your property every January the 1st. However, by law, we're required to physically inspect your property at least once every 3 years.
Okay. So if I recently closed on my property in July, is it going to match the appraisal done by the county in January?
If you just purchased it in this coming July, for instance, the appraised value that we have might be a little bit different because we appraised it as of January 1st, 6 months ago or 7 months ago. So it depends on if there's a variance in the market.
Okay, and what are some factors, what can change my appraisal?
A good question. Obviously, you know, the market is always changing. There are physical forces that are out there. We call them physical, functional, and obsolescence. Physical is your house depreciating as normal. Functional, if you have issues with the house, like foundation issues, and obsolescence, if it's not usable anymore. So those three factors are the ones that determine the three types of depreciation that we measure.
Okay, so chances are if a school opened up down the street or a fire station, police department, chances are my taxes are probably going to go up, right?
You know, the chances are that a house next to a school, elementary especially, or middle school, they go kind of hand in hand, so it might increase their values.
Okay, so if I got a letter in the mail that my taxes went up, but I know there's been no major changes in the area, nor to my structure, do I have any options at that point, or is it whatever the county says, I'm stuck with it?
So what we do by law, and real quick, the appraisal district is actually a state agency. We're not associated with any local governments. We actually have to give the property owner due process. Every April, we send out a notification of increase in values to a property owner. They have 30 days to file a protest by state law, and we have informal hearings with the public. We have formal hearings with the public. Of course, this year things are a little bit different. We have to certify our values every year. It's a cycle by July 25th to each of the taxing entities. And then we go do the next part of the county, and they do their job over there.
Okay, and who would be the one to let the homeowners know of that increase? Is it going to be the appraisal district, or would it be the mortgage servicer?
So the appraisal district's job, Janie, is the one that has to, by law, inform the public every April. So when you get a notice, when you get that piece of paper every April, and you say, well, my taxes went up, don't go to the tax office. It's actually our office that's sending you that notification. And it's our office that if you have any questions regarding the estimate we're giving you. And mind you, that's just an estimate. It's not etched in stone until we certify it in July. So the public, this is the part where the public plays a big part, and their involvement is utterly important in the process.
Okay, thank you. Rose, he's been mentioning appraised value a lot. Does that have a direct effect on a customer's homeowner's insurance?
Not really. the appraised value that the county uses, I'm sure the variables that they use are important, but not necessarily is what we use. We use what is called replacement cost value to insure a home. Now, replacement cost, the definition of that is what it takes to replace, repair at the time of the loss. And that's it. There's no depreciation. They're not going to deduct any money for how old the home is. That's what we like to insure a home for. Now, I have had many people say, but my appraisal only says that the house is worth $80,000 and you're insuring it for $120,000. So I have to explain to them that the appraisal value is totally different from what we have to insure the home for, because we have to account for, if the home is a total loss, there is debris removal costs, which are very expensive. Sometimes it could take up to 20% of the value of the home. Let's say $100,000 home. Sometimes it takes up to $20,000 to go in and remove all the bad stuff that happened in that particular site, and then have to rebuild it. So it may be 100, 120, it might even be more than that. And we've had that happen where there wasn't enough money to rebuild after removing the debris and after and when they started constructing the house again. So it is not, it really has nothing to do with what the appraisal value is. So another example, and you mentioned that if you build a school down the street, okay, the property value, according to the county, is going to go up. For us, that has nothing to do with it. It is we go by the square footage, by the construction, whether it's brick or frame or two-story, and there's other variables that we use, but the main thing is the replacement cost of the house.
Okay, thank you. I know Jorge mentioned that there's appraisals done every year on the property. Is that the same for insurance? Do you do inspections on the property each year before it's time for renewal?
Most of the time, yes. Not always. There are a few companies that will do it every 2 years. But in general, nowadays, most of the companies are going through the expense of checking the homes every single year. They want to make sure there's no damage. They want to make sure that nothing was added that they didn't know about. Just they have to be careful, because when we had the hailstorms back in 2012, and the adjusters came to look at the homes and look at the damage, there was an addition. They had enclosed a carport, and now it was actually part of the building, and there wasn't enough money to replace that roof. So they do have to do an inspection every year.
So adding a shed or a storage or a swimming pool to my property, is that something that would affect me tax-wise and insurance-wise?
Both, yes, absolutely. I can't speak for the county, but I can speak for the insurance company, and they want to make sure that we are including everything every year that is part of the of that homestead. Sometimes there are insurance companies that will automatically increase the value of the home without even seeing it. And again, the client comes in and they'll say, hey, last year you insured it for 100 and now you're insuring it for 110 and you're raising my premium. But then you also have to consider inflation. It's going to cost more to rebuild a home this year than it did, 5 years ago or
Okay. Rose, I know you just mentioned the word homestead. I'm going to go back to Jorge and ask him. I've heard of something called the homestead exemption. Can you give us a little bit more information on that?
So the state of Texas has a homestead exemption if you obviously live in your primary home and that's your place of residence. You get some sort of tax relief. It winds up to being a few $100s off your tax bill for your high school, for your independent school district, PSJ, McAllen, Edinburgh, not for your city or for your for the county. There's also another exemption called the over 65 exemption. So what Texas did was, if you turn 60, once you turn 65, that homestead gets an additional exemption added to it that not only reduces your taxes, but in many instances freezes. It's called the tax ceiling exemption. So for people that are 65 and over, and obviously, you know, their assets are depleted as far as finances, they're able to at least try and freeze the taxes when they turn 65, assuming they haven't added anything to the property. Now, here's a caveat to that. As Rose just mentioned, you know, we use the same appraisal guides that they use, and they do change. And, you know, you mentioned the school increasing values. That's not the only thing that increases values. Cost indicators, our schedules are cost-based, similar to the insurance industry, but we use depreciation as a factor because it's a depreciated value. So, you know, we can increase the value of your house, for instance, if you have a homestead or an over 65 exemption, but there's limits as to what your tax increase can be. Those are two different things. Your tax increase can only be at 10% from one year to the next, but your value can go from 100 to 150,000. But your assessed value, which is your taxable value, will go up to 110,000. People that have taxes frozen sometimes have a misunderstanding. They think my value shouldn't be going up anymore. So because my taxes are frozen. So what we have to do is explain to them, the law protects your tax ceiling. It doesn't protect your tax value. The value is based on the market, the cost, and all other factors. So your house value could be $200,000, but you're paying when you turn 65, and it was at $100,000, you know, 10 years ago, you know, which is sometimes a good thing because the value keeps going up, but your taxes might be frozen.
Okay, cool. So you did mention the homestead exemption, and you mentioned the over 65 exemption. Are those things that are automatically applied to the homestead, or is that something that they have to apply for?
Absolutely. You know, these are all state exemptions. Obviously, you have to apply for them. They're not automatic. So even if you do a closing at a title company and they say, hey, you know, there's an exemption you qualify for, it's not automatic. First of all, you have to come in and apply for it. The over 65, you have to come in because sometimes we don't know if people move out and they don't change the title. You know, there's an abundance of there's disabled vet exemptions. There's a disabled vet exemption that eliminates all your taxes on your house. Those are the people that are unemployed. That one passed in 2009. So if I'm a disabled vet and I am considered unemployable as determined by the VA, in other words, I can't work, then it's 100% tax exemption on your house. Okay, doesn't matter whether it's $1 million house or a $10,000 home. So that winds up being fully exempt. You have to apply for it, and you have to apply for them. Normally, we would say at our office and or our email or our website, but now because our office is closed, you're only able to do it through our portal on our website.
Okay, and what documents do I need to file for that exemption? I'm sorry, Rose.
It's okay.
Documents, good question. Look, we'll typically know who already owns the property because we'll get a copy of the recorded deed from the courthouse. However, if you want to reassure yourself, just bring that information. You have to have a driver's license. Whoever owns the house, whether it's one spouse or another, the driver's license has to match the physical address of that property. Okay. And if it doesn't, then we won't accept the PO box address. Unfortunately, there's people that have actually taken advantage of the system. They might try and claim it in two different places, either in the state, the county, or another part of the U.S. It's against the law. So you need a driver's license, the title. If you don't have it, we'll probably already have it. If it's for a disabled vet, we'll need a letter from the VA. If for a disability in general, we'll need some sort of information from the Social Security Administration and or your doctor. Obviously, if you're over 65, that's going to show it on your driver's license. And it doesn't matter who's the one that's 65. It doesn't matter whether it's a man or the woman, where that's as long as one of them's turning 65. For instance, if somebody's turning 65 on December 31st, at the end of the year, they get the exemption for the whole year.
Oh, wow.
It used to be different. In the old days, you wouldn't get it until the following year, but the law changed about 10 years ago, and they say, you know what, we're not going to penalize them. We're going to give them credit for all 12 months. So if you were born on the 31st and you're turning 65 this year, you can come and apply for it through our website right now.
Okay. Thank you so much for that information, guys. It's been great. And thank you for joining us today. The key word for this segment is homestead. HOMESTED. You can go ahead and send an email to info@thehomebuyersfair.org with that word for a chance to win a gift card. And one more time, the word is homestead. Thank you guys so much for joining in. Ahorita regresamos en español.